Hello, today we want to talk about a donor advised fund and what it is, otherwise known as a DAF, DAF. So, what is a donor advised fund? In essence, it's an account where you can donate different types of assets, okay, real estate, stocks, cash, etc. Um, and as it is a nonprofit organization, you could possibly get a tax deduction when donating into this fund, and you can aggregate funds over years, etc. But you can have your own donor advised fund, very easy to set up, kind of like having your own private foundation,
Right.
without the logistics and mechanics and tax implications and all that of a foundation. Okay, so that in essence is a donor advised fund. And what are some of the benefits, Jason, of having a donor advised fund?
Yeah, it's one is the simplicity. So it's just a very simple account. It can be connected to your investment account. It can be connected to your bank account. So you can easily give money into your donor advised fund just by electronic transfer. So it makes the giving part really easy. You get to take the deduction the year that you put the money in. But the benefit is you don't have to give the money right away. So when you donate it into your DAF, you are losing control for the use of it for your own personal money, but you can now have control of where it gets given to. And the nice thing is most DAFs, they actually have the ability to track your giving. So you can kind of see where you're giving money to. It's easy to also give to different charities. So you can have your favorites. You can connect your charity, whether it's your church or whatever charity you like to give to, you can connect it to the DAF and then just easily deploy and give whenever you see fit or whenever the need comes up. You can easily give that money away. You can also, like you said, you can donate all types of things: cash, real estate, stock. So there's a lot of different things that you can donate into it, which is a nice feature as well. And at the same time, this money can be invested over time. So even though you give it and when you give it right away, you don't have to actually give it to a charity. You're giving it to the DAF. You don't actually have to give it to the charity. The time frame that you're not giving it to the charity could be, there's no limit. So you can invest that money and have that generosity bucket, if you will, continue to grow for you while you look for a place to give in the future.
Okay, and understand we're not recommending necessarily everyone go out and
Yeah.
establish a DAF. There are times when it makes sense and times when it doesn't make sense.
That's
Okay,
right.
so when would someone use a DAF? Well, one example is if you're already in a high tax bracket and you're itemizing.
Mhm.
Okay, and I understand a lot of people don't itemize. Okay,
Right.
so that's a consideration. But if you're already in a high tax bracket and itemizing, this could be a tool, a means by which you can get some extra tax deductions.
That's right.
Okay. Also, if you have a large taxable event, you're selling a large chunk of stock or real estate property, business, okay, which could cause high capital gains or income to be triggered, higher income tax bracket, again, could be a tool for you to get some other deductions against those gains, okay? And third, if honestly, there's people that are as we seek to find purpose and meaning in life and just want to give. Some people, I've heard people tell me this: I'm just so blessed and I want to give back to the community or to something. Okay, great. It's a great means to be radically generous because there's no limit as to how much or when you can give it.
That's right.
So that's another benefit or time of when you want to use a DAF.
Okay, so one strategy you could do, which Paul, you mentioned about a large taxable event. So if you have a large taxable event where, let's say, for example, maybe you sell your business, okay, or you get a huge bonus at your work for whatever reason, or your actual company that you work for gets sold, and then the company stock that you get that gets sold off. So you can have a large combination of different types of large taxable events. There's a lot of different ways you can do that. So when that happens, and then in this scenario, you're going to go back into a normal tax bracket from the years to come. But in the year that a large taxable event happens, it will bump you up into a higher tax bracket.
Possibly.
Possibly. So for that year, you could consider what's called stacking your giving. So basically, let's say, for example, let's say this person typically gives 10% a year away. Maybe they're giving 10% to the church or whatever. So if you were to do 3 years worth of your giving in 1 year, so for the next 3 years, you put one time to take to get the large taxable deduction on that donation in the year that large taxable event happened, then you can wait and over the next 3 years, you can give that money away. But you took advantage of when you're in a higher tax bracket to potentially get that larger tax deduction.
That's right. And we're always going to advise, seek a tax advisor or consultant to see how much of the deduction and all that qualifies. But yes, stacking is a great strategy, especially when you have those spike years that are not normal.
Right.
Okay. So another event that could happen or happening is when you may have a stock that's appreciated over time. And we've seen people come, I had this stock since I was a kid or a child, and so I bought it 20, 30 years ago. And now they have this huge capital gains that'll be triggered if they sell it. Okay. So if you're a giver, normally one way to maybe take advantage of a DAF is you can actually donate the stock. Okay. Instead of cash, have the DAF sell the stock. You don't realize any gains. So you just gave this huge gift. Okay. And let the tax trigger pretty much go away, because they will pay no tax on that, and you got the benefits of all world. You still gave, you still got a tax deduction possibly, and you eliminated the cap gains on that stock, and the DAF can then use the proceeds, or you use the proceeds from the seller stock to donate to whatever charities you want.
That's right. One last strategy you could think about is if you are teetering between tax brackets. So let's say, for example, depending on what year it is when you watch this, right now, for example, you have the 24% tax bracket and then you have the 32% tax bracket. So that's an 8% difference. And for, let's say you're just above that 32% tax bracket, the way that your income is made up of that year, you could considering giving a portion of your income to the DAF to bring your taxes back down to that marginal tax bracket of 24%. So that's just a way to kind of take advantage of giving and getting a larger donation, a larger deduction. And then, but at the same time, you never really give in any of these scenarios just to get the tax deduction. We're just telling you a tool to be kind of a good steward, to be able to take most advantage of not only being able to give generously and make a big difference in this world, but also to do it wisely and take advantage of all the tax laws that are out there to be able to improve your financial picture. So we hope this helps.